Joining us now exclusively is the CEO of outlet owner Tanger, which has Signet as one of its tenants. Great to have you, Stephen Yalof. So let's talk not about Signet first, but about food and beverage, because you're saying that you're seeing that as something that's driving longer dwell times, which is leading to more sales. Food and beverage not quite as expensive as diamonds and pearls. What's so attractive about it?
Well, interesting. It's a strategy like anything else. And first of all, thank you for having me on. I appreciate it. But, if you think about the strategy of growing our business, and, we're an outlet-founded company we're in the full-price business as well. We've added a couple of new shopping centers over the last few quarters. But what we're finding is as we re-merchandise our centers, we're making them more attractive to more people. And that's really what it's about. It's about driving traffic to the center. And the beautiful thing about being the owner of the shopping center is you get to merchandise the property. So it's not just a jewelry store or just a restaurant. It's a whole complement of uses that you put together in one large venue so that a lot of customers will come for a bunch of different reasons, but hopefully stay and interact with all the different uses that are available on the site.
It's what a department store used to be, but now I guess it needs to be disaggregated, which leads me to, is Sephora the new anchor tenant? And I don't know if you deal with Sephora specifically, but whenever I go into one, young people, they tend to be packed, all kinds of age ranges. What's the role of beauty in that vision you just outlined?
Well, beauty is a great driver of traffic right now, especially for a younger consumer. And again, as we are re-merchandising our shopping centers to get a wider array of people to come in, we have our core customer. You never want to alienate your core customer, so we've got the brands that they've always come to love and come back for over and over again. But to get a new customer off the couch and into a shopping center, there needs to be a number of uses that appeal to them. And Sephora has been great. In fact, we just added 6 Sephoras to our portfolio that have only been open inside of 6 months. They opened up extremely strong. As you know, they're a Louis Vuitton brand. And because of that connection, we've now have an open line to that business and better communication with them. I also think that the luxury product in a Sephora or in a cosmetic store is really bringing customers in right now.
I do want to go back to diamonds and pearls, and specifically the luxury customer, the customer that's going to spend more on a purchase in a place like Signet or elsewhere. We're starting to get luxury retailer earnings as well from some of the Europeans. What are you seeing in that area of the market from a retail perspective and a consumer pickup perspective?
Yeah, I think the consumer, there's still some uncertainty in the consumer's mind right now. There was a big bump post-election that we thought, sort of stabilized and gave the consumer some certainty. But then there was some movement in the interest rates again. And I think that uncertainty always causes a little bit of problem on either the high end or the low end of the market. And so as far as the luxury brands are concerned, I think perhaps apparel, maybe high-end handbags might be having a rougher time. But we're finding that the cosmetics, Chanel has their own line of cosmetic stores. And there's a number of locations that they have across the country. They seem to be performing really well. And again, going back to the Sephora story or the Ulta story, I think it's those great brands, those luxury names that are really driving that customer in. And, perhaps we shouldn't be surprised should we see cosmetics in the front door and on the front counters of some of the luxury stores across the country as a lead-in to bring new customers and existing customers in to those stores as well.
What are the brands that you're seeing the most traction and the most pickup and that are coming in as newer and bigger tenants in your facilities? I was with Fran Horowitz of Abercrombie & Fitch. Right. She was on this show yesterday. Stock took a nosedive because they issued guidance that was better than what they had before, but the street has been so keen on what their growth rate has been for the past 2 years. Is it brands like that? Is it some of the upstarts that are not publicly traded that are taking over now?
Well, it's interesting because a number of the brands that have really had a great quarter fourth quarter are some of the brands that took a nosedive yesterday. And, Fran's doing an unbelievable job with Abercrombie. We also see American Eagle. And again, they had a tough day yesterday, but American Eagle seems to be doing a great job and driving a lot of customers in. You talked about a younger consumer. Those are brands that a younger consumer is looking at, too. I think a lot of people are going back to work now. So they're, where maybe they were in the office 2 days, now they're going back to 3 days, in some instances 4 days a week. So we're seeing brands like Brooks Brothers and Cole Haan doing a really good job now getting the customer in because they're dressing people again for work. But there's, great value, particularly in the outlet space, and we saw a lot of these outlet brands really outperforming perhaps other venues going through the holiday selling season.